Canada and the USA will go head to head to see who has the better energy returns, and we will begin right now. The energy sector has been booming in Canada and in the US as the world has been dealing with high oil prices in the face of a record energy crisis in Europe. Things are not looking to improve anytime soon, and this is good news for energy investors, though the impact on inflation is not a welcome side effect. With the US releasing their strategic reserves, oil prices have come down, but that is only temporary, and we can look forward to higher energy prices as we near year's end and into 2023. There is still a lot of money to make in the energy sector, and we are going to find out if Canada or the USA is the better energy market and what that means for us as investors. Before we drill a well, let me know in the comments if you have diversified into the oil sector. I do have some healthy diversification into oil. As always, I am very grateful to see you all here in the home of free financial content on YouTube. If you are new, please subscribe right now so that you won't miss a single moment. And a huge thank you for that click. Instead of one of my traditional lists, we are going to have a little bit of fun here today. I have chosen 3 Canadian stocks and 3 American stocks that we will do battle with. We will have a lightweight or low cap battle, a mid cap or middleweight battle, and finally, a high cap or heavyweight battle. That one should be a doozy. That will leave us with 3 winners, and the overall winner will be whichever country wins 2 or more of the battles. This really should be exciting. In choosing who would be fighting, it was a simple market cap selection. I went with the highest market cap that does not have negative earnings per share or a negative price to earnings ratio. We want some companies who have fighting chances to win. The winner will be whoever has the highest total return from January 1st, 2021 until the time of recording, so roughly a year and a half worth of earnings. We are going to start with the lightweights, who are our small cap stocks in this battle. In the Canadian corner, we have Advantage Energy, who will be going head to head with Delek US Holdings Inc. Who will win and take the lightweight title in today's list? We will start with, well, Canada. Advantage Energy Limited has a ticker of AAV, and they are the lightweight choice for Canada. They are an oil company based out of Calgary, Alberta, that supplies clean, reliable, and sustainable Canadian energy to Canada as well as the world. They have a market cap of $1.981 billion and a beta of 2.07, so they are about twice as volatile as the market average. They have an earnings per share of 2.88, and their price to earnings ratio comes in at 3.65. The average PE ratio for the North American energy sector for the last 10 years is 11.78. So Advantage may be undervalued in this sector. Advantage does not have any dividends, so they are going to have to rely 100% on their growth in this lightweight battle. Rolling into January of 2021, they had a share price of $1.70, and by year's end, they hit $7.44 for an ROI in 2021 of 337.65%. Whew, that's not too shabby. Of course, we then entered a bear market, and well, they kind of kicked that bear's butt and currently have a share price of $10.52. This gives them an ROI for 2022 thus far of 41.40%. That is huge. The number to beat is their total ROI from January 2021 right up until now, and that comes in at 518.82%. Holy banana bread, the USA could be in trouble. Delek US Holdings Inc. has a ticker of DK, and they are the lightweight choice for the USA. They are an oil company based out of Brentwood, Tennessee that has assets in petroleum refining, logistics, asphalt, and renewable fuels. They have a market cap of $1.963 billion and a beta of 1.46, so they are a bit more volatile than the market average. They have an earnings per share of 3.89, and their price to earnings ratio comes in at 6.75, so they are well below the sector average. Like Advantage, they also have no dividends to help them in this battle. At the start of January 2021, they had a share price of $15.33, and by year's end, they sank to $14.20 for an ROI in 2021 of negative 7.37%. Holy banana bread, this is not looking very good for the USA. So far this year, they did a little better, and their share price did rise to $26.26. This gives them an ROI for 2022 thus far of 84.93%. That is fantastic, but clearly not enough. Their total number comes in the form of an ROI of 71.29%. Yikes, that's fantastic. fantastic, but it does feel deflating because they lost. The first battle for the lightweight title goes to Advantage as they beat Delek 518.82 to 71.29, and it gives Team Canada the first victory of the day. They only need one more win to take the day. If they do win the middleweight, we will still go on to the heavyweight as a sweep may be at stake. We are moving to the middleweights, who are our mid-cap stocks. In this battle in the Canadian corner, we have Keyera Corporation, who will be going head-to-head with Plains All-American Pipeline. In moments, we will find out who will win and take the middleweight title in today's list. We will start with the USA this time, as I think you have to kind of switch ends or something like that in this sort of thing. Plains All-American Pipeline has a ticker of PAA, and they are the middleweight choice for the USA. They are based out of Houston, Texas, and they are a pipeline transport company that specializes in the transportation and storage of petroleum and gas. They have a market cap of $7.731 billion and a beta of 1.66, making them much more volatile than the market average. They have an earnings per share of 0.82, and their price to earnings ratio comes in at 13.50, so they may be a wee bit overvalued compared to the sector average. Dividends will come into play this time as they have a dividend yield of 7.859% that is paid out quarterly in the amount of 21.7 cents USD per share. Rolling into January of 2021, they had a share price of $8.08, and by year's end they hit $9.48 for an ROI in 2021 of 17.33%. Adding in the dividends, the total return in 2021 was 25.19%. In 2022, thus far, they rose to $11.07. This gives them an ROI for 2022 thus far of 16.77%. That is not bad. The number to beat is their total ROI from January of 2021 until now, and that comes in at 37%. We do need to add the dividends, and seeing that they received 7 out of 8 payments, we will give them 7/8 of their dividend yield, or 6.88%. So our number to beat is their total ROI of 43.88%. Can they hold on with this number? I really am a little bit nervous for them. Keyera Corporation has a ticker of KEY, and they are the middleweight choice for Canada. They are an oil company based out of Calgary, Alberta, and they are one of Canada's biggest midstream oil and gas operators. They transport mostly natural gas liquids throughout all of North America. They have a market cap of $6.149 billion and a beta of 2.34, so they are a little more than double the market average in terms of volatility. They have an earnings per share of 2.03, and their price to earnings ratio comes in at 13.70. We have a dividend yield of 6.90 that is paid out monthly in the amount of 16 cents Canadian per share. At the start of January 2021, they had a share price of $24.50, and by year's end, they rose to $28.77 for an ROI in 2021 of 17.43%. Adding in the dividends, their total return was 24.33%. This is not looking good for Canada. Let's hope they did better this year. So far this year, they have actually faltered, and their share sank to $27.82. This gives them an ROI for 2022 thus far of negative 3.30%. I can tell already that Canada is in some serious trouble with this one. When we total everything up, their ROI comes in at 13.55%. When we add in their partial dividend yield, we get a total return of 19.87%. Holy banana bread, the middleweight title is going to Plains All-American as they edged out Keyera 43.88 to 19.87. Nice one, America. It looks like everything is going to come down to that final heavyweight match. Holy banana bread. Hold on to your seats, folks. We are moving to the heavyweights, who are our high cap stocks. In this battle, in the Canadian corner, we have Enbridge, who will be going head to head with ExxonMobil. This is it, folks. It all comes down to this one. Final battle. In moments, we will find out who will win and take the heavyweight title and clinch the overall title in this Canada versus US Battle Royale. Switching ends again, we will start with Canada. Enbridge has a ticker of ENG, and they are the heavyweight choice for Canada. They are based out of Calgary, Alberta, and they are simply a mega oil company that encompasses Canada's main line system. They also have made many strides into renewables as well. They have a market cap of $101.12 billion and a beta of 0.92, making them a little less volatile than the market average. They have an earnings per share of 1.74 and their price to earnings ratio comes in at 20.68, so they are way over the sector average, but that may not be a bad thing in their case. They have dividends with a yield of 6.888%, which is paid out quarterly in the amount of 86 cents Canadian per share. As we move into January of 2021, they had a share price of $40.63, and by year's end, they hit $49.52 for an ROI in 2021 of 21.88%. Adding in the dividends, the total return in 2021 was 28.77%. In 2022 thus far, they rose to $49.94. This gives them an ROI for 2022 thus far of 0.81%. A little flat, and maybe good news for the USA team. The number to beat is their total ROI from January 2021 until now, and that comes in at 22.91%. We do need to add the dividends, and seeing that they received 7 out of 8 payments, we will give them 7/8 of their dividend yield, or 6.03%. So our number to beat is their total ROI of 28.94%. Can they hold on with this number? ExxonMobil Corporation has a ticker of XOM, and they are the heavyweight choice for the USA. They are an oil company based out of Irving, Texas, and they are a multinational oil and gas corporation. These guys are absolutely massive. They have a market cap of $413.42 billion and a beta of 1.05. They have an earnings per share of 9.14, and their price to earnings ratio comes in at 10.85, so they are just below that sector average. We have a dividend yield of 3.55% that is paid out quarterly in the amount of 88 cents USD per share. That lower dividend does help Enbridge a wee bit. At the start of January 2021, they had a share price of $41, and by year's end, they rose to $60.42 for an ROI in 2021 of 47.37%. Adding in the dividends, their total return was 50.92%. This is really not looking good for Canada. So far this year, they soared, and their share rose to $99.19. This gives them an ROI for 2022 thus far of 64.17%. Holy banana bread. Congratulations, America! Their total number comes in from January 21 to the time of recording to an ROI of 141.93%. When we add in their partial dividend yield, we get a total return of 145.04%. The heavyweight title goes to ExxonMobil as they demolished Enbridge 145.04 to 28.94. In addition to winning the heavyweight title, America wins the day 2-1 as the American energy sector schooled Canada a little bit. Wow, that was actually kind of fun. So if you guys would like in another video to see me go sector on sector in another sector, just let me know because I'll do it. I will. The fun does not have to end here because you can always watch my video on REITs that I have linked on the left, or you can check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.